So how do retirement plans work? Well, it depends on the retirement plan. So let's break it down for you. All right, so how do all these different retirement plans work? And maybe you're confused because maybe there's all these options you're hearing about, especially if you're looking up online, Googling and looking at these different things. Everybody got their opinion. Everybody's got something to offer. Everybody's got this thing. And even at halftime when you think you found something that's new, you find out they just changed the name to actually mean something else, right? So you have these things that are like different names, like we talk about Max ROI Infinite Banking. Well, infinite banking, sometimes people call it these different tax plans and this and this and this when it's just all life insurance. Well, what about 401ks, IRAs? What about all these retirement plans? Well, let's just dive in and see what these actually are. All right, so let's talk about these different ones. You see like the 401ks, the IRAs, the 403bs, the 457s, Roth IRAs. All these are different types of retirement plans. Now, what are they exactly? Now, if we were trying to lump some of these together and make it easy, 403b, 401k, 457s, things like that, these are actually plans that are much the same. Even IRAs to some level, these are all plans that are offered through their employers, right? Depending on the kind of industry you're in. For example, if you're a teacher, a 403b would be an option. 457, especially if you're in certain types of work, maybe you work for a hospital and things like that. So you get these different plans. 401k is a more traditional one that most people get offered. These are all the same kind of retirement plans, just packaged differently. Now, there might be different nuances. For example, 403bs, like with teachers. Many teachers can retire earlier than age 59.5, which is the typical retirement age for a 401k. Well, that might be age 55 or something else, depending on when their retirement age is. Same thing with government workers. It could be different. But for the most part, they all kind of have the same basic rules. There's an age minimum. There's even an age maximum that you have to start pulling money out, because if you don't, they penalize you with a 50% penalty of what you should have been pulling out in the first place. And that means that's money that's taken out that never goes to you, it just goes to the IRS as, hey, you broke the rules, so go back to jail. Do not pass go. Do not collect your $200, right? That's what it's basically like, when you have those kind of qualified retirement plans. So those are qualified retirement plans. You have Roth IRAs, which unlike those plans you put in with pre-tax money, it grows tax-free, then it comes out taxed, like in the 401ks and IRAs. Roth IRAs, you put in with after-tax dollars. You put in after you've already paid taxes on your paycheck, and then you put that money in, it grows tax-free, then it comes out tax-free. But once again, they put the age limit of 59.5. They also put limits on how much you can contribute, right? So you can only contribute like maybe $7,000 a year into your Roth IRA. Now, there might be ways around it. If you get a Roth 401k, then you can get a little bit more contribution limits and whatnot. There's backdoor Roth IRAs and all that kind of stuff if you make too much money or you're trying to put away more money and things like that. And those just get really complex and convoluted, and you start to wonder, at what point does the government say, nah, no more. You can't do that anymore, right? Well, I hope they wouldn't try to change these rules on you, but let's be honest. Can you really trust the government to not change the rules, especially in their favor versus yours? It's hard to say. So that's what you can do with these different type of retirement plans. Now, a lot of retirement plans, these are the traditional ones you might get from a financial advisor. Just understand, most financial advisors will tell you all these retirement plans should be invested in mutual funds of some sort, right? Some combination of stocks and bonds and whatever else. Could be like foreign country, stocks, or it could be domestic. It could be tech stocks. It could be just a general S&P 500 index, which, by the way, you hardly ever get that option, especially if you do traditional retirement plans with employer. By the way, 401k plans, horrible. They usually do really poorly on the rate of returns that you get. So even when you get the match, it just makes up for the bad performance. So it actually doesn't usually do any good for you versus just investing on your own. But again, it's there. It's an option, right? So anyways, so these retirement plans, there are a ton of them out there. Now, some that are lesser known, even though they are out there. Now, most people would call this a supplemental retirement income that you can pull off that's tax-free. That's using life insurance. So for example, you can actually use life insurance policies. There's various types. Now, this is not life insurance like your term insurance. That's just death insurance. Life insurance, where you have a death benefit, but you also have this tax-free savings account inside, is something you can get usually between two types. There's universal life, and then there's whole life. Universal life, the one thing with universal life is it does get more expensive as time goes on. So it can actually eat into your cash. So if you're trying to live on retirement, it's very possible that that money won't grow enough. And between them taking out more costs each and every year for insurance, and then you're taking out money too, you could be running out of money prematurely. A little bit too fast. It can get very expensive. Whole life does the opposite. It's expensive up front, but then it gets cheaper as time goes on. A little bit easier to pull out money. I also use whole life insurance because I used to use all the above, all these different types of insurances I've had myself. I will tell you from my own personal experience that I like whole life better. Why do I use whole life? Well, one, I actually don't use it for retirement, although it can be used for a tax-free retirement. And I don't even have to wait till I'm 59 and a half years old. And not only is it tax-free, but it's usually returning a pretty stable, right around at least 5 to 6% a year that it's returning. And I don't have to worry about markets going up and down. It's very boring, which is kind of cool because I don't have to worry about that. The other thing too is that when I use life insurance, I actually use it as some of the ways to store my emergency savings, where money I'm not going to invest, but I don't want it sitting in a bank paying me point nothing percent and then I get taxed on point nothing percent. I'd rather store it here where I'm going to make a much higher return and make more money, especially if it's going to sit around and do nothing. But I can also use it to invest as well. I can borrow from the insurance company rather than pulling my money out. I can let it sit there and growing tax-free while I borrow money from them to go use that to invest, especially in cash flowing investments, whether it be in my business, whether it be in real estate, anything that would pay me some kind of income, I invest it in those places. And that is so much more fun because now, because of the amount of money I've taken from the investments to pay back towards that line of credit, it makes sure that I pay less and less in interest while they're paying me more and more in interest. So I net positive interest here while I'm still earning income over here too. So I actually make money in two places at once and make a bigger profit than I would just using my bank account. So there's a lot of things I can use it for that's awesome, not to mention all the protections that are in place. But that's actually a place I can store my money for retirement income, but especially if I were to retire before I'm the age of 59 and a half or 60 years old. So I'll give you an example. I had one client where he was in his late 20s. He says, Chris, I got my game plan through 2029. I want to be retired by 2029 or 2030. And of course, we have a goal for our own company to help at least 1,000 families become financially independent by the year 2030. I'm excited about this. I want to see his plan. And he's got it listed out year by year. He shows, of course, he already has a couple rental properties. He had some other investments he was using too. And then he said, all right, here's my plan. With the money I have and the money I'm earning already from these investments, I'm using that to reinvest to buy more assets, specifically buy more rental properties to the tune of about at least 1 or 2 properties per year. And obviously it gets easier as he makes more cash flow to buy more. And so I'm seeing his plan and I say, well, 2029, I see that you got about $4,000 a month of rental income, but your goal is $5,000 a month. Where's the difference? He said, oh, it's right here. Because remember, Chris, you set up this life insurance policy on me where I'm putting in $15,000 a year. Well, after about 8 or 9 years here, I can start pulling out already $900 a month, which put him just a few $100s over, about $5,200 a month total. And I said, wow, that's awesome. Not to mention, by the way, the income he's taking from the life insurance is tax-free. And then also the money he's getting from his properties is tax advantaged, where he pays little to no tax on that income as well. So the cool thing is that he's paying almost no income tax on that $5,000 a month, and he's in his 30s. He didn't have to wait till he's 60 years old. He could do it earlier. And that's the one thing you have to ask yourself is, when I'm looking at these retirement plan options, the thing you have to ask yourself is, what is my ultimate goal? How soon do I want to have the option to retire? Even if you don't retire. By the way, it's becoming more and more trending that more people don't want to retire. They just want to have the option to work when they want to, not because they have to work. And so they want to be able to work part-time if they choose to work part-time, or just some of the time. Maybe they have their own business or consulting business or something like that, where they can still do some work, make some income, keep themselves active, but they still got more than enough money from their investments to keep them going and to be able to pay for their bills. And so that's one thing that's really amazing is that if you have a retirement goal to retire in your 60s, most of the other retirement plans could work for you. And by the way, even if you have 401ks and IRAs, you can invest them in real estate. If you have a self-directed IRA, which you can move your money away from your financial advisor, which they won't like, but you can make a lot more money than they'll make you if you do it that way. But from there, of course, if we have things like using infinite banking or we're using other things with passive investments, we can actually retire much, much sooner than waiting until age 60. This means you get your life back. This means you have time with your family while they still want to be with you. I'll tell you, as my kids are now, I have 5 teenagers in my house right now. The older they get, the harder it is to peg them down and be able to plan stuff with them. It's much, much easier to be able to spend time with your family when they're young, when they pretty much have to stick with you because they're young enough, right? It's much easier to do it then than when they become adults and they're moving out and on their own. And so I recommend, if you can, create financial freedom now, right? Create that passive income today so that you can live that life that you love with those you love right now. So if you're wondering, how much passive income could I create with my situation? What's possible? Go to moneyripples.com. There's a passive income calculator you can click on. It just takes a few minutes, put in a few numbers in there, fill out completely and accurately as you can, because you'll find that they'll spit out a number for you. And that number might shock you. It might amaze you. It might be underwhelming. It might be overwhelming. I don't know. But trust me, Put in that number because you can find out how much passive income you could possibly create in the next 12 months. Try that now.